Okay guys, so welcome to lecture 3, and in this lecture we're going to be taking a look at why I personally prefer to trade in the crypto markets rather than any other markets, okay? And I know there's a bit of, some of the Forex guys are not particularly that fond of the crypto markets for various reasons. The main one is they do believe that for, day trading and scalping, that the crypto markets are, just not liquid enough. They're not a serious market, they attract a lot of retail traders. And just in general, if you're a day trader, stay away from the crypto markets. And I'm going to quickly talk you through why I don't think that should be the case for most retail traders. In fact, I actually believe the opposite, okay? So starting with number one, crypto is one of the fastest growing industries on the planet, okay? So if you're day trading in the crypto markets, this is a source of income, but inevitably you're going to be getting exposure to the various crypto assets out there. You're going to be paying attention to the news cycles. You're going to be keeping up to date with what's going on more than if you were day trading Forex, for example, okay? And, this gives you lots of great opportunities that you wouldn't expect when you first get started, okay? Because, if you're constantly every day wired into this market, you are going to start picking up on things, which, opportunities that you wouldn't have expected and can really change your portfolio. If you catch some scalp trades and you catch them at the right times, because of just how fast this industry is growing and, the exponential nature of the gains that do occur in this market, you can sometimes, carry 20% of that trade through for a few months and really make a massive change to your trading portfolio, okay? So one of the fast growing industries, it's definitely an industry that you want exposure to. You can look at the 10-year growth trajectory of crypto, and there's nothing else that really matches it, okay? And that's objective. So secondly, we have, it's a new industry compared to traditional finance. And this means it's going to be inefficient, okay? And your edge as a trader is going to lie in extracting value out of inefficient aspects of the market. Okay, I'm going to get into that later in the course. But the fact that it's a new industry, it hasn't had time to really, get a firm standing of larger traders. There's a lot of inefficient markets. A lot of the altcoins are very, very inefficient in terms of the way they're priced, in terms of the order books. Often the market makers aren't that great. Lots of inefficiency in general, and this is perfect for smaller retail traders who know what they're doing, can come in and take advantage of these inefficiencies. When you compare it to a highly, highly liquid market like the Forex market, you're not going to have the same kind of inefficiencies there, and your competition is going to be a lot higher in terms of the entities that are participating in the market. And that brings me on to number 3, okay? Your competition is often fairly low. Crypto attracts new traders. So what I mean by this is, crypto is kind of the new shiny kid on the block when it comes to trading. And a lot of the people that are getting a bit of exposure to trading or, to the financial markets in general, when they're starting out, they do end up gravitating towards crypto. Okay, it's exciting. The moves are aggressive and violent, especially in the bull markets. This is where most new participants come in. But what this means for you, okay, if you're trying to become a sophisticated trader, like what I try and teach, in my Discord and in my videos, if you're trying to take your game up a level, you'll quickly find that the crypto is flooded with uninformed, emotional participants who can make your job quite a lot easier when it comes to extracting value out of this market over the long term. Okay, let me make it clear to you. Okay, you are not against the chart when you're trading. Okay, the chart isn't your friend, it's not your enemy. This is just basically expressing the collective consciousness of the market. And who you are trading against is the counterparties, okay? It's the other traders in the market at any given time. That's your competition, okay? And if you do want to be extracting value out of any given market, you need to be in the top few percentage of traders in that market, okay? There's no getting around that. You have to be up there. You have to be very good at what you do. And the benefit of doing this in the crypto market is, as I've said, there's lots of newer traders and you can take advantage of this. Okay, the fourth point, and this comes back to the second point a bit in terms of the inefficiency, is the fact that the crypto markets are fairly low in terms of liquidity. And this is what a lot of the Forex guys tend to have a problem with, and why they, say you should stay away, is there's not enough liquidity to, get in and out of trades. The price action's not good enough. And I wholeheartedly disagree with this, okay? Especially if you're scalping Bitcoin and Ethereum, which, they have daily trading volumes in the hundreds of millions, if not billions now. I very, very much doubt that if you are a retail trader and you're trading retail size, okay, whether this is, you've got $1,000 account or $100,000 account, you're not going to have any problems with liquidity, really, okay? They say it makes the charts less clean, but it just makes the charts different, okay? So when you have less liquidity, the charts are slightly different. And, this leads back to the fact that they're inefficient. And that is 100% an advantage for you as a retail trader who can easily slip in and out of positions, okay? The fact that it's low liquidity, the fact that it's inefficient is actually an advantage for us. And we can take advantage of this going forwards, okay? So 5th point, and this kind of wraps it all up, is there's lots of great opportunities for people starting out with a lower starting capital, okay? So coming into crypto, if, you don't have much to begin with, this is the perfect market for you as long as you employ good risk management. You take it seriously, you try and up your level as a trader. And it comes back to what I was saying earlier. You can find a good scalp trade. Let's say you're betting on Bitcoin going up. You get it at the perfect moment. Say you pick up a scalp trade down here. You take your profits, you leave 20% of it to run. Okay, you set it and forget it. This has happened to me multiple times, especially in the last bull market, where I picked up a scalp trade. I'd close the majority of the trade at my take profit, and then I just leave the rest to see what happens, with much lower risk. And often, crypto is very subject to massive parabolic moves, which can really change how your portfolio is looking, okay? So that's it for lecture 3.